The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially over the past year, while the labor market has remained strong. And that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely. Our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask, what would it take? I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take.